Let's talk to Clem Chambers. He's the founder of ADVFN. Very good morning to you, young Clem.
Morning, Nick.
Now, call me old-fashioned. I read lots of bearish headlines on Bitcoin this week, whether from a regulatory point of view, whether it's a Ponzi scheme and the likes. Obviously, the price action is suggesting people are sellers for choice. When we hit these sort of headlines in the stock markets, we tend to find a bottom, as we know. Is this time to be basically maybe thinking about dipping your toe in on the bull?
Well, I totally agree with your logic. I'm not sure the time is right just yet, because I think with a crash, you've got to look for blood in the streets. So you really want to see a headline that says Bitcoin is dead. Bitcoin, it's all over. And it really needs to be on the 9 o'clock news or 10 o'clock news, whatever the news is in your country. And I don't think we're quite there yet. I think below 5, definitely. I'm thinking there's a possibility of 2,500. And obviously, when the balloon goes up, you know, you can never really find the bottom. So you could even be like $1,500. But I'm going to be buying some, you know, below in the 5,000s. I have been. I'll be buying a lot if it goes under 4. I'll be buying a shed load if it gets to 2, and I'll be buying a warehouse full if it goes under 2.
Right.
So that's my kind of my levels. And I think that the market is very, very weak out there. I caused a bit of a Twitter storm when I pointed out that mining rewards had collapsed in the last few days, and people don't realize what that means. They think that means how many Bitcoins you get per block and all that stuff, but it means how many dollars you get using a piece of mining equipment. And those returns have absolutely collapsed in the last couple of weeks. From like, you take a GPU, you'll be getting $3.50 or $4 per GPU. You're now getting $1.20. And it's going all over the place. You know, it's halved and doubled and tripled and collapsed in the last 3 or 4 days. So the volatility is also there that suggests that, you know, things are a bit awry. But, you know, this stuff's not going to go away. Bitcoin, I mean, is a tremendous currency for international transaction, as is Ethereum. So it's just a matter of it getting to the bottom of its trough and then going off into another bull market. And, you know, this is going to happen this summer, I believe. Yeah, well, I believe it's going to be, I was going to say maybe autumn, but I actually don't believe that. I think it will be this summer, no later than September. We will see the bottom, and then that will be the time to fill your boots.
Okay, so let's move on swiftly in terms of global equity markets. You've talked about very bearish US chart formations on the indices. Are you still thinking bearish things?
Well, I mean, it's incredibly bearish out there right now, isn't it? I mean, I think it's incredibly bearish.
Well, China's down China's down 22% this year, which, you know, is, you know, that's a headline in itself, right?
Yeah, it's a headline that we're not reading as well, which is quite interesting. But you can put that down to, you know, Trump and a trade war and all that. But the reverse QE, and I keep going on about this, is the big deal. Now, interestingly enough, I'm reading lots of pieces that are coming out of nowhere saying, oh, maybe we've had enough reverse QE now, Fed. Oh, the Fed is now saying maybe they've had enough. Maybe they need to keep their big balance sheet. And I think that's an example of a certain amount of fake news pressure being applied through the media on the Fed to stop this reverse QE. It's really smashing the developing countries because the dollar funding is dried up. Because if you think of reverse QE, it pushes money into carry trades, and carry trades are high interest rate and with bonds, for example, and that pushes the money outside of the country, pushes it into the developing markets, and they're getting their dollar funding because of QE. And now they're going to reverse QE. The tide of money is going the other way. Well, the tide of money is going out of the emerging economies first. You would imagine that it would as well. So they're the people that are getting hit by reverse QE. And if they keep doing it, 50, 60, 80 billion every month until further notice, then that will mean that the money is going to dry up, and soon enough the tide is going to come in the developed countries as well. So the Fed itself are saying things like, well, maybe we should keep a big balance sheet, or maybe it's not such a bad thing after all, because they've started the process and they've seen what's happened to the Dow, they've seen what's happened to the markets, they've seen what's happened to volatility. And if they keep having to crank this handle 40, 50, 60, 70, by October, $80 billion a month for 3 years, and we saw what happened in February, how the roof came in then, it's unlikely that they're going to avoid some sort of catastrophic liquidity crisis. And I think they're realizing it. So either they're trying to backpedal a bit, or people whose livelihood depends on this easy money, after all, most of us really, are also pressing them through the media to slow this ship down and perhaps even stop it. So it's interesting that the reverse QE, which they're managing really well, is starting to bite now, and people are starting to cry out in pain. Well, it's meant to be going on for 2 or 3 years at $80 billion a month. So already after 6 months of doing it, people are starting to shout, stop, whoa there. And also the Fed itself, or members of it, are starting to float bubbles that maybe they should stop now.
Okay, let's turn to the World Cup. Goldman Sachs have predicted England are going to get to the World Cup final. What are your thoughts on that, algo?
Well, I think, isn't the algo Russia wins the World Cup?
No,
isn't that the algo?
On that note, Clem, thank you very much indeed for your time.
Cheers, Nick.